Hey everyone, and welcome back. I'm finally beginning to see real feedback from running this channel. The number of subscribers is growing slowly but consistently, and I see more activity from you. I'm getting comments, questions, and reactions, and I really appreciate it. Last week was a great example of how the market can send mixed signals. On one side, we saw very strong fundamental results from the leaders in technology, especially Nvidia. On the other side, we saw weakness in consumer-facing sectors. So I want to talk you through what actually happened, what the market reaction really means, and how I personally see the opportunity in all of this. This is not a recommendation, it's my view on the facts and the sentiment. The big story, of course, was Nvidia. Everyone was waiting for the report, and they delivered. Revenue was up around 62% year over year. Net income was up roughly 65%. And what matters most for me is that both revenue and profit continue accelerating. And this isn't just still growing, this is speeding up. And the data center segment keeps expanding at a massive pace. Jensen Huang, the CEO of Nvidia, emphasized the same message we keep hearing. The demand for AI infrastructure is real, it's global, and still in the early stages. So did mention Lisa Su, the CEO of AMD earlier. So the industry isn't slowing down, it's scaling. And to me, this shows again that the AI story is not some bubble narrative. There is real business demand behind it. And yet, despite these strong numbers, many tech stocks still pulled back. The whole previous week was almost every day red, and this wasn't only about Nvidia. A lot of big names dropped as well. From my perspective, this tells us that the market is in a risk off mode right now. Not because the businesses are weak, but because sentiment has shifted. I'm personally not interested in crypto as an investment, but Bitcoin works as a kind of very good proxy for market sentiment. When investors feel confident and willing to take risks, Bitcoin usually moves higher. When they are scared, they sell it. And last week, we saw exactly that pattern. The market shifted into a risk off mode, and Bitcoin reflected that same fear. If we look at other companies reporting last week, names like Target, Walmart, Home Depot, Intuit, I don't even need to go into specific numbers. The overall picture is clear. The consumer demand is mixed. In some categories, it's softer than before. Retailers are cautious. Home improvement demand is not booming, and you can feel more pressure compared to previous years. So the contrast is very clear. Tech and AI are strong and accelerating, while many consumer sectors are feeling some pressure. And then we have the macro side. During the week, expectations for a potential rate cut in December changed significantly. According to the latest CME FedWatch tool, the probability of a rate cut is now around 71% versus about 29% for no change. This is a strong move in expectations. Markets don't just react to current data, they react to what people believe will happen next. And when expectations shift this quickly, it affects almost every asset class. So here is the important part. On one hand, we have strong business data from companies leading the AI revolution. We have acceleration in revenue, acceleration in profits, and clear statements from leadership confirming real demand. On the other hand, we have market prices moving down, not because of business fundamentals, but because of fear, macro uncertainty, and negative sentiment. And this is exactly the kind of environment that historically creates opportunity. Again, not a recommendation, but for me personally, when companies are delivering strong results and market prices are falling because of sentiment, that's usually when you want to pay attention. And we can also see this in the fear and greed index. Fear is dominating. And very often, when everyone talks about bubbles and upcoming crises, the real crisis doesn't happen. Crises usually hit when nobody expects them, when everyone thinks everything is perfect. Now, let's talk about the upcoming week. This week is not exciting in terms of earnings. There is nothing major that I'm really waiting for. The only company I'm personally looking forward to is Adobe, but that report is still around 2 or 3 weeks away from now. What is important this week is macroeconomics, and I want to highlight this clearly. From now on, macroeconomic news will probably have a bigger impact on market direction than company earnings. So, inflation, GDP, labor market data, these will drive sentiment more than individual quarterly reports. This Wednesday, we'll get US GDP. We are also expecting new home sales, initial jobless claims, and German GDP for the European investors. On top of that, we'll see PPI, retail sales, and German CPI. So it's a very heavy macro week. And these releases can move the market quickly. For me, the key point is simple. The next major move in the market will depend on macro trends, especially expectations around the next interest rate decision. Whether the next move is a cut or no change will set the tone for the coming weeks. To summarize, fundamentals in tech, especially AI, look very strong to me. Consumer sectors are mixed. Macro expectations are shifting. Sentiment is fearful. And when fear dominates while fundamentals are strong, that's usually when opportunities appear. I also want to add one personal point. I plan to use this environment for myself. I'll be investing in the companies and sectors that I believe are the most promising and most aligned with long term trends. For me, the current drop in prices isn't a warning, it's an opportunity. Again, this is not a recommendation. I'm simply sharing what I'm doing and how I read the market. And it doesn't mean that the prices cannot go lower. They can, but I don't want to miss these prices. Thank you guys for watching me today, and I appreciate every like button and every comment. And I'll see you in the next video. And for those who still plan to start their YouTube channel, I encourage you to start it and not to be afraid of it. I'm sure everyone can benefit from it.